What's up, guys? Welcome back to another video. Today's video is going to be about the habits that I follow on a daily, on a weekly, that are allowing me or that are going to continue to allow me to build wealth. When I say the habits that are going to allow me to continue building wealth, these are the habits that they're not just one big move, right? I'm not just doing one thing, but these are small habits that I repeat day after day, week after week, month after month, that are allowing me to continue creating my wealth, right? And majority of these are going to be finance tips, money tips that I follow that allow me to continue to create my wealth and build my wealth. The first habit that I follow is paying myself first. So before I spend anything, before I calculate what I'm going to spend on my bills, I know this is counterverse or on the contrary, on the opposite side of what usually these finance people are saying, but I, for the most part, pay myself first. How do I do this? When I get my paycheck, the first thing that I do is I'm already factoring in how much is going to my Roth IRA account, how much is going to my brokerage accounts, how much is going into my ETFs that I'm investing into, and how much of that is also going into a little bit of crypto. So before I spend on bills, before I spend on any expenses that I have, already factor in the money that needs to go into my stocks, needs to go into my Roth IRA account, needs to go into all my investments. Because I honestly think that's the best way for me to build, right? I need to be thinking about my next 5 to 10, 15, 20 years before I'm thinking about the now. All right. I might already have a majority of the time for a month. Let's say my expenses in total are 400, 500, right? When you talk about my insurance or food I'm buying, phone bill, that money, I usually just take the money out of my checkings account, right? My checking account, which might have like a 600, 700, and I pay that money for the month. Whatever my bills are, I pay it for the month. So when I'm getting a paycheck and I'm receiving a paycheck from my job, I'm automatically just putting it into my investments, right? This is what works for me. I pay myself first before anything. I pay myself first before paying bills, before doing anything. So if you're in your 20s and you're in your 30s, maybe in your 30s you might not be able to do this, but you're in your 20s, I want you to prioritize paying yourself first in every way possible, right? For you, let's say your bills and your expenses are a lot. You might want to just pay your expenses first. Obviously, you have a car. Let's say you have a car note, you have rent that you're paying, you have food that you're buying. Those things you get that out of the way first. But then the rest of that money, you go into putting it into assets, you go into putting it into investments. This is what you have to do in order to pay yourself first. The second habit that I do consistently on a day to day, week to week basis is I track every dollar. I track every dollar because I understand that if you don't know where your money is going or how much money is coming in, how much money is going out, you have no control over it. And what you can't control is something that's gonna, it's gonna, it's just, you're just gonna not know exactly what you're doing with your money, right? So this, for the most part, why I started doing this. And I started doing it very intentionally because I realized even when I was doing it and I was doing it passively, right? When I say passively, I just mean I was here and there just checking how much money I had coming in, how much money I had coming out. And I wasn't checking it on a week to week basis, day to day basis. I just started losing track about of my money, right? I started spending more. I started to just have more outflows, have more and more money just going out that I didn't know where it was going to. So I realized I have to keep up with this every day, literally every single day. I check how much is coming in, how much is going out, how much I'm making for the week. I'm budgeting literally every single day, right? Any transaction that goes on in my cards, whether it's my credit card, my Bank of America card, or my SoFi account, it's being tracked. It's being tracked on my spreadsheet. I created a budget tracking in the beginning of the year, literally January 1st. Well, no, December like 25th, I created this budget tracking that's going to help me track how much money I'm making gross over the whole year. How much money gross is just everything that you make before taxes, before social security. And then I also factored in net income. Net income is all of that subtracted. So my social security, my what's the other thing? Social security, your taxes, you withdraw all of that, and then you also factor in just how much you're gonna have after all those deductions. So that was my net income, and I created a tracker specifically week by week just to keep track of how much money I'm making, how much money I'm bringing in for the year, how much money I'm bringing in for the week, how much money I'm bringing in for the month, right? I did it very intentionally because I wanted to know every single detail. So I track my income, my expenses, and my investments consistently on a day-to-day basis, on a week-to-week basis, and on a month-to-month basis, right? So that way, by the end of the year, I'm not shocked at anything. I'm not surprised, but I kind of run myself like I'm a business, right? I run myself like I'm a business. I see the numbers because if you guys don't know, I'm a finance guy, right? In school for finance, and I pretty much know a lot of things in terms of finance because that's what I majored in. So I'm learning a whole bunch of things, and when I go into these finance classes, or you go into these lectures and you're doing some of these assignments, it just naturally changes your mind to understand that, okay, you have to think about yourself as a business. No matter what people want to say, you have to think about yourself as a business. You're a business that's running, you're like an engine, right? So you have to consistently be checking on your engine. You have to consistently be checking on what's working, what's not working. You have to consistently be checking on what's being put into your engine, what's being put out, right? What you're taking out of your engine. So if that makes sense. So me, what I do is I want to be aware of everything that's coming in, everything that's coming out. So awareness leads to you making better decisions. Awareness leads to you being able to make decisions off of just those numbers that you're seeing on a week to week basis, on a month to month basis. So those are the things that I do. The third habit that I started to do was focusing on increasing my income, right? So cutting my expenses helped, right? I cut my expenses a lot. I cut out some subscriptions. I stopped eating out more. I What's some other things that I did? I stopped making some purchases, like buying stuff on Amazon, buying stuff on. There's this app called Boohoo Man that I like to buy a whole bunch of stuff on. I stopped for the year. I pretty much cut out everything. I haven't bought anything on Amazon. I haven't bought anything on Boohoo Man. I haven't bought anything, right? Let's just say here and there I'll go to the store buy something that I need. But online shopping, I had to cut it out completely, right? Just to kind of reinvent myself, right? Because those habits that you build over time, I realize I'm like, for like 19, 20 something years, I'm doing the same thing, just buying stuff consistently. Ever since I got money at 14, I've been buying online, buying this, buying that. And the amount of money that I realized that I spent on stuff that I didn't need, or 2, 3, 4 years later, you're not even wearing half the stuff that you bought. I just realized I'm gonna cut it out. Right? If you like buying clothes, you like buying different shoes, stuff like that, I'm gonna tell you, you really don't need them. Because for the most part, what ends up happening to you is you buy those things, and then 2 years down the line, you don't need them anymore. 3 years down the line, you don't need them anymore. Rather take that 200, 300 that you're gonna spend on a pair of shoes and just go invest it in the S&P 500. Go invest it into QQQM, the Nasdaq 100, tech the tech ETF, right? So you can get some growth off of that. So you get a little bit bit more exposure just to investing, right? So I increased my income how? Right? Had a job, moved on to another job, moved to a hotel job, right? Where I was working as this event coordinator, made some money there. But then I realized, okay, if I'm in the finance realm, I'm in the finance area, I need to get a job that's finance oriented, finance, right? Around the finance world. So there was an accounting department in the hotel. So what did I do? Went to apply for it, got the job. Got the job, did the interview. Now that job paid me more. And you stay at that job for a year, 2 years, what do they end up doing? Increasing your pay. Increase your pay as time goes on. So that's how I'm growing my income. That's how I'm able to actually grow my income in these positions. You do as much as possible in the job. You show that you're a team player. You show that you're here to work. You're here to grow in whatever company it is that you're in, and you're able to grow your income, and that's something that I was able to do. So that's the third habit. The fourth habit is, for me, just staying consistent and not trying to be perfect, right? Staying consistent, not trying to be perfect. I don't try and time the market in terms of investing, or when I'm investing. I don't try and time the market, because nobody can time the market for real, right? Even the experts who are on Wall Street, the people who uh are controlling a lot of money, these asset managers that control a lot of money, these asset managers that are controlling institutional that are controlling institutional money. These investors can't even time the market. So what makes you think people like me and you can actually time the market? So I don't try and be perfect with the stocks I'm investing into, or the ETFs, but I just try and get exposure to broad market ETFs, get exposure to some good companies that I know and understand what their mission is, what their vision is for the future, what exactly is their market share value, right? What, like, if you're looking at a company to invest in a specific company, what are you looking at? You're looking at the moat. What makes this company special? What stands out about this company? Company like Apple. Apple is a leader in hardware devices, iPhones, iPads, iMacs, right? All these devices that we have, MacBook, the what is it, Apple Watch, all these devices that we have. Apple is the leader at the forefront of this, right? And they sell internationally. It's not only domestically here in the United States, but they sell everywhere. Europe, Asia, South Africa, North Africa, all these different continents, they sell there too. So they're international. So if you're going to invest into a company like Apple for the long run, then that's a good investment, right? Be ready also as well to see your money go down as well. This stock go down, because that's how stocks work. They go up and down depending on the supply and demand, right? People view this stock as a stock that's going to go up in the future. They're going to buy. They're going to continuously buy, and then the price is going to go up. But if they don't and they start selling, then you're going to see the stock price go down. So Apple has to do its job and make sure that it shows you as an investor that they're worthy of you actually putting your money into the company. They're worthy of you buying their stock, right? Because you essentially have a when you're investing in a company, you have a little piece of future earnings on that company. So when that company grows its earnings, when that company grows its revenue, you're essentially going to be making a little bit of money off of that, right? That's when the stock price raise up, and you could either sell or you could hold for the long term. So I'm not trying to be perfect or time the market or do any of that, but I'm just staying consistent with investing, with just learning over time and improving every single day, improving my knowledge, improving the way I think, improving the way I'm investing. And, because wealth isn't just built through discipline, isn't just built through luck, I meant, but it's built through discipline and being consistent over time, being intentional, right? Know I say intentional a lot, but intentional just means doing stuff with intent, right? Doing stuff for a reason, not just doing things just to do it, not just investing just because I'm telling you to invest, but actually investing because you understand what you're doing. And even if you don't understand yet, but you're trying to understand, right? If that makes sense. So these habits aren't complicated. These are the things that I do, and I feel like they're powerful, right? And I've been able to change my life as time has went on. I've seen the change. I've seen the growth, right, in my wealth. And it's allowed me to be where I am today, right? In the position that I'm in. So master, if you're someone you want to reach to a position of wealth, master these habits, right? Track your money every single day. Focus on increasing your income, stay consistent, don't try and be perfect, and always pay yourself first, and you'll actually be able to be someone who's building wealth, who's trying to create wealth. So, thank you for watching this video. Do not forget, check out eawealthteam.com to see my website. It has, I forgot what it has. It has a weekly, no, it has a network tracking. It has a network tracking Excel sheet on there that you can get for free. It has one-on-one consulting if you want to talk to me about certain things, about building your financial wealth, about investing, about opening a Roth IRA account, about getting a 401k. And lastly, it also has there's something else that it has. It has a Roth IRA setup blueprint that will allow you to set up a Roth IRA. So check it out, eawealthteam.com. Thanks for watching. Peace.